Well, it is that time of the show where we turn our attention over to the grain markets, and joining us here on location at the South Central Ag Lab to discuss some of the current trends and numbers in the grain markets is Heather Ramsey. Well, let's talk about what's happening, and it's a busy week. I mentioned those scorching temps. At the end of the week, we'll have a report coming out. Let's just kind of size up as you see things, the trade that's happened thus far to Wednesday morning.
Yeah, to this point, I don't know that there's been a whole lot of positioning in the market actually related to the report, as much as we've seen some kind of end of the month, end of the quarter positioning. The July reference board for both corn, beans, Chicago wheat, Kansas City wheat. First notice day is the end of this week, and so we're doing a lot of cleaning house there. We've got to get out of positions and get through this delivery process that's coming. So there's been a lot of jockeying around there. I think that kind of led the week. So unfortunately, managed money has been sellers to this point all year. And I think they hit a number Tuesday morning that triggered some computer algorithm trading. So you've kind of got, the emotional human side of the market has been short. They traded it just low enough to kind of trigger some of those February lows. And that sent the computers spiraling on a sell. And unfortunately, that was a pretty brutal day. That's probably the most, awful feeling day from a farmer perspective of these markets that we've had recently. Then coming in here today on Wednesday, we're seeing a little bit of correction, a little bit of retracement. I think this is a pretty solid support level without any new information actually taking the fundamental side of these crops higher. And with the widespread variance in weather, I don't know that we have any record-setting crops here. Record-setting crops take favorable, consistent weather all the way across the Midwest, and that's not what we're seeing right now.
Let's talk about kind of the news as we sit right now. Continued flooding along the Missouri River, and as you and I were visiting about, the trade doesn't really want to speculate on how many acres might be sitting underwater at the moment.
Yeah, for some reason it's a lot easier to say something's burned up than something's flooded out. I've never really understood that mentality. You can survey acres just as easy whether they're flooded or dried out. But at this point, I think it's unknown on how quickly those waters will recede. And if they recede quick enough, it's not a complete loss. There's definitely damage there, but how much damage is the question. So along this northwestern Midwest, northern Midwest region, your northwestern Iowa, South Dakota, southern Minnesota, into Wisconsin, parts of northern Illinois, just a ton of water, and more projected coming their way. So it'll be a couple weeks, I think, before anyone really tries to speculate on how many acres have been, lost or destroyed. As far as then the eastern side of the Corn Belt goes, we are trading. Some condition ratings dropped here this week, and we are definitely able to see how poorly the eastern side looks, and so that's getting figured in. There's a sweet spot there in kind of southern Iowa and parts of Illinois that look really, really good, but outside of that, I would say Nebraska looks really good as well. And outside of that, a lot of question marks. All
right, well, a lot of question marks. I want to bring up a viewer question that came in this week. Eric chimed in after yesterday's trade. He said, with what happened yesterday, plus if we get a bearish report on Friday, is sub $4 corn out of the question?
I will never say never to prices. We've seen things go sky high that we never expected. I don't know why we couldn't see things trade lower versus what we expect to see. What I will say is the market does have a way of fundamentally getting back to that fundamental value. So when I say fundamentals, I'm talking about true supply and demand. The market has a way of getting back to that number. At this point, will we trade lower or higher than what fair market value is? Absolutely, we will do that. Could we see cash prices this week? If you're looking at harvest cash prices, could we see those prices be sub $4 cash? Absolutely. Can we see futures go sub $4 cash? Oh, I'd like to think not. I'd love to think not. I mean, that doesn't work for anybody. But the reality is the market's going to trade however the market feels like trading. And if they've got enough momentum built in on the money side or the computer side of things to push things lower for a time frame, they will. I think the better question, back to that viewer is, okay, but what have you done to protect yourself if that happens? You want to set yourself up as a farmer to withstand that time frame in which we trade an erratic number. And when we trade an erratic number higher, that's great, take advantage of it. But when we trade that erratic number lower, what have you done to set yourself up and protect yourself? And I think that's what we're always trying to do is the what ifs can totally happen. the I've had my own customers, are we going to see 380 cash corn? We might, maybe for, a couple weeks or a month or so. I mean, we definitely could. So what do we do to avoid that so that we don't have to actually make a decision in that time frame and then get stuck with those prices? So I think that's kind of like the follow-up question or caveat to that viewer question is, all right, now what have you done in case that happens?
Let's put a bow on our conversation here. First 6 months, essentially, of the trading year in the books as of the end of this week. What give us maybe a bullish sentiment as we look at the next 6 months?
I think the next 6 months, the market starts looking at a whole global corn position. They've alluded to a global corn position and how important that is. They need the Northern Hemisphere to produce. The reality is the Northern Hemisphere is struggling. That's not just the US, that's Canada, Europe, Black Sea region. China's having issues in their growing region. So I think we shift from a very localized kind of weather into a more global, where is this corn crop, where is this wheat crop globally? Because we are shrinking those crops year over year, projected to on a great Northern Hemisphere, we're projected to shrink crops. So on a not so great Northern Hemisphere, what does that look like? And I think that's what we'll focus on in the next 6 months. And I expect to continue to see this kind of delayed reaction. The farmers, boots on the ground, they see it. Mm-hmm. They want the reaction that minute. And it's been taking a little while. It's been taking 7 to 10 days to trade some things. So I think, look from a global standpoint, be prepared for delayed reaction type market trading. And then on the localized side of things, we've got to be ready to pull triggers on cash basis environment because it's really strengthened and it looks to start strengthening in the new crop as well. So lots of opportunities still.
Opportunity, that's a good word. Thanks, Heather.